So the Kit Kat as well as the Maggi maker Nestle is expected to post its Q2 current year 21 numbers, and let's get a lowdown on what to expect in terms of numbers coming in from Nestle. Let's not forget, like I mentioned before, base quarter has always been very low for this time. So base quarter versus this year is going to be a higher growth supported by the base quarter as well. So talking about the revenues, we're expecting a 14.6% growth in terms of revenues coming in for Nestle, and it'll be at around 3,496 crore, almost 3,500 crores, what you could say. In terms of the profits of the company, an 18.4% growth is what we're expecting in terms of the profits of the company, and profits are expected at 576 crores for the quarter. Margins, that's the operating margins or the EBITDA margins, what you say, that we're expecting a 60 basis point expansion coming in over there. So 25.1% versus 24.5%. Now volume growth, which is very important for most FMCG companies. Last time obviously we were seeing negative volume growth or very low volume growth for FMCG company. This time we are expecting an 11 to 12% volume growth coming in for Nestle. So let's see how this actually works out. Nestle does not come out with a volume growth number, but it's an inferred volume growth, what we expect coming in to be at 11 to 12%. Now, talking about revenues, obviously, like I mentioned, sales growth is higher, mainly due to the low base or the weak base in Q2 current year 20. So last year's base quarter was very weak. Other than that, there was a better supply chain compared to the last year base quarter, last year's Q2. So that is why that would also lead to strong sales in the products this time around. Last time we had seen a lot of supply chain issues coming in also because there was a strict lockdown, there were a lot of restrictions, there was a nationwide lockdown. This time there was lockdowns but restricted to certain areas, certain states had different rules. So there was not much of an issue on the supply chain front, and that is what has been a boon this time for most companies as well, essential companies especially. So that is why that supply chain was much better, and that is why leading to a better sales in products and revenue growth as well. Other than that, obviously continued demand for packaged food is being quite high, and that healthy demand is leading to a healthy revenue growth as well. Talking about the margins of the company this time around, there's a benign raw material cost is something that is supporting the margins for Nestle. So milk prices have not seen much of a hike compared to other commodity prices, and that is what is supporting the gross margins. And in turn, obviously, the operating leverages, cost efficiency programs, benign raw material cost, overall leading to a better EBITDA margin and an operating performance for the company, and that is why a 60 basis point expansion as well. Talking about the factors that we'll be watching out for from the company will be the commentary coming in on any trade channels, as well as recovery. How is the recovery shaping up in the trade channels, as well as rural demand? How is the trend there? New product pipelines, any demand trends for packaged food specifically is something that we are keeping an eye out for from Nestle.